Hello, party people. Sorry for being away for so long. I've been traveling a lot during the holidays, and when I got back, got reactivated. But had been kind of on bed rest because of her foot surgery. Then she had a colonoscopy this last week. Starting to get more game time in, and maybe pivoting to other MMOs here the next couple of months. There's one or two games I'm really looking forward to playing. I'm gonna try and get in either to their alpha or beta. So we'll see how well that goes. And hopefully it'll be fine. I do need to work. Catalyst. So, but in the meantime, since the market's going crazy, it's double rewards week on Destiny 2, we'll try and polish up our stores of materials. Like, I had actually cashed in all my usable tokens the other day, and so if I could get up to 2,000, that'd be great. I'm pretty low on it, so that's not super fun. But just gonna be basically grinding out this strike over and over and over again. Maybe try and find a group for a master a little bit. So if you haven't heard, what's going on with what's been a little bit. So what's been going on with the stock market has been pretty crazy, and so kind of economics 101 is basically that how is the price determined on anything? It's basically that the price is whatever someone's willing to pay for something. So that's partly why you see Bentleys and Rolls Royces and Mercedes priced so high. It's like that there are people out there willing to pay that high of price for those high-end luxury cars. That being said, it's like how you control the price is also based on supply and demand. If you oversupply things, we'll take cars for example, things like Kias, see a lot of market saturation because they oversupply and the demand stays relatively constant. So that being said, supply and demand, another basic of stock market. So full disclosure, I've been a member of the Wall Street Bets subreddit community for maybe a year, maybe not quite a year, but definitely going back to like last summer, and I remember like this kind of stuff being talked about, and the Wall Street. I'll say this about the Wall Street Bets subreddit community: it's been flagged and been taken down a lot lately. Their Discord's been removed, and the subreddit group still exists though, and it was temporarily disabled yesterday, and there's all kinds of shit happening. So basically, going back to like 2019, a lot of the Wall Street Bets subreddit is partly the appeal of it was for me was like people doing due diligence, which is a way of saying like, hey, I've done research on this company, and here's why I think it is a good investment. Even though the stock price might not be very high, here's why I think it will go up. So it's like, and then basically they submit all their research, all their investigation findings, and then people can kind of pick or choose if they're gonna, if your research is solid, and there's not, and you also like acknowledge like a lot of the kind of what the top analysts are saying, like, oh, this is why this company won't fail. can cite them and also say like, yeah, but they didn't quite consider these things, and like, or these like trade deals that are going to happen, or this company's like import export stuff, like all that kind of stuff is mentioned in due diligence. So but back in 2019, it kind of was discovered that, hey, there's these really large hedge funds that are trying to short these stocks, and it's only gotten exacerbated by the pandemic. So those stocks being like GameStop, which was doing terrible, and it had been doing terrible for a year. Same thing with like AMC, the movie theater chain, other companies like BlackBerry, who, if you're over the age of 25, you might remember Blackberries from a long time ago. They were like a business type cell phone before iPhones really dominated the market. And so it was like a bunch of hedge funds, like, and it wasn't just BlackBerry either. It was also things like Nokia and stuff like that too. So, but they kind of found out that, hey, there's these really large hedge funds that are trying to short these stock market or these stocks, which, if like, I could kind of provide some very quick simplified examples of shorting stocks. However, I'll also just say, it's like, if you hadn't seen the movie The Big Short or Too Big to Fail, it's like they're both great movies. I think one of them was HBO exclusive. I think that was Too Big to Fail, but The Big Short's really good. I think that's still available for rent or purchase on Amazon. But, and also, I'm not a trader, I'm not a broker, I'm not an investor, or I'm just like kind of a low-key pleb investor who has Robinhood and Coinbase, and occasionally, like, when I get spare money, we'll occasionally like drop money into that and pick a few companies to invest in, or not. So to short a stock is basically saying you're going to bet against something. So kind of like reference the movie The Big Short. It's basically about a group of hedge fund guys who basically ran some metrics and did some due diligence and discovered that, hey, we think the housing market is actually going to collapse. Like, this is what our models project, and we're going to bet against the housing market, which at that time everyone was like, oh, like, talking about the economy's really strong, we're still in a bull market. And if you don't know what a bull market is, it's basically like continuous gains over time, and like, as opposed to a bear market where continuous losses over a period of time. So everyone's like, no, we're in a bull market. Like, there's like subprime mortgages have been great. Like, they're helping so many people buy homes. Like, it's really helping the housing market. And they kind of realize, like, hey, you're propping up a bunch of really bad loans to people with not great credit, and they're going to end up defaulting. And then, like, on that default, other people have to basically pay for it. And ultimately, like, there was so much of that money involved, it just became a really bad trickle effect. And it was one of the biggest contributors to the collapse of the economy in 2000. So that's shorting in a nutshell. You're basically betting, and unlike most stocks, like most people who are in the stock market, it's like you buy a stock and you want that price to go up over time. Like, that over time can be within a couple of hours, it could be a day, it could be, over multiple years. Like, and that's basically what your 401k is. It's just a basically very diversified amount of money that a hedge fund or investment group manages for you, and they diversify themselves so that and it's so diversified that even though they might invest in various stocks, they're ultimately going to make money over time, because they also have a lot of skin in the game and a lot of money wrapped up into it. So hedge funds are more, it's kind of like random gamblers who would be like, if you, me, and like, 10 of our richest friends all got together and we all like just pooled our money, like, and we started making trades and buying certain stocks, and he thought that, oh hey, like this is gonna be like I did due diligence on this, and I think this is gonna be really good. Like, and we're gonna see that go up. Like that's basically what a hedge fund is. So it's a little bit different than a bigger trading house like Citigroup or TD Ameritrade and Lehman Brothers or Fannie and Freddie Mae. So, so these hedge fund guys basically just kind of got together and say like, hey, we're seeing the decline, we're seeing the writing on the wall with GameStop and AMC and BlackBerry and Nokia's stock all going down, and so we're gonna buy a bunch of their stock at $4 or $5 a share, and it's not like, oh, we're just buying like 2, 3, 4 shares. We're buying like they're buying thousands of potential shares. So they buy these shares and then they basically sell it back to their broker, and then ideally when they sell it back, they're selling it back. They bought these shares at a certain price, and then when it goes down, like they basically have made money off that. Like it's a short squeeze, which basically. Now I'm getting ahead of myself with the squeeze. So shorting is basically like you're buying a stock at. There's a nice kind of infographic thing going around on Twitter and Reddit where it's basically like, oh, if you buy stock at like $10 and it goes down and you sell it back to who you bought it from for $7, you've made $3. So that's like a successful shorting. So, however, some of the shorting is like, oh, it's really dangerous because you're really betting that you're not hoping that companies are going to be successful. You're actually hoping that they're going to like fail. So with that in mind, like that's what a lot of these investors have kind of, or these hedge funds have done, is basically like they bought up a bunch of stock in BlackBerry and AMC and GameStop and are betting that it's going to fail. So the Wall Street Bets subreddit like kind of became aware of this a while back and kind of decided like, hey, that's kind of fucked. Like these people are profiting off all these companies that are about to go out of business. And it wasn't really so much a thing of like, hey, we're gonna stick it to this hedge fund. It was part of that, like I'm not gonna lie. But another large part of that was that, hey, like if we collectively all buy GameStop stock, like we can actually create more of a demand for this and increase the value and the revenue of the company just by simply purchasing stock. Like, and bear in mind, this has nothing to do with the GameStop in your area. Like the local store where you go in and you talk to the associate or the key holder, the manager, it's like this has nothing to do with the day-to-day operations of a GameStop. Like it is definitely generating more buzz and more attention for the company, which is good. But I mean, this wasn't like a strategic long-term investment for a lot of people in that subreddit, let alone like the investors as it is. Hey, like, you know, no one's trying to invest in GameStop long term. I think everyone's kind of like, everyone does see the writing on the wall where it's like everything's moving more digital or to a streaming service. Like there will always be a market for like digital copies of something. However, like that is like vastly declining, and like retail manufacturers aren't like wanting to like hold as much inventory of the game. So the stock market and the stock of GameStop actually has nothing to do with the GameStop in your area. So it's not like you're going to necessarily see prices go up at GameStop. Like nothing like that's going to happen. Like your trading value is still going to be really terrible for whatever games you're bringing in there. There are plenty of memes about, but so that being said, a lot of these kind of just mom and pop, or like these smaller investors, like guys like me, who it's like we work 40 hours a week, like we have our job, we're go to work or school, we've got a little, like with a little bit of play money, and we just kind of throw it back into the stock market to play with. And like do speculative investments. So, and there's no real telling what stock is going to rise. Like you can look at past performance, but even that is not any real indicator of like a company's continued success. So basically just what's happening now is that the Wall Street Bets subreddit is bought up a bunch of the GameStop stock, and this like a week ago it was at, or a couple of weeks ago it was at like about $4 when I last checked it. So we'll check just. So we'll see. So yeah, it's like a week or two ago. Yeah, it was like less than $20. Yeah, 6 months ago it was at $4 or $5, like kind of when talked about, and then just over the last like couple of days, like you can see this huge jump. So if you invested in GameStop and bought 4 or 5 shares back in September, even with the dip that GameStop has seen today, I mean, you still would have made like 180% return on your investment. So a return on your an ROI, or return on investment, is basically like, so if you give me $10 and I'm like, hey, I can get you a 50% return on your investment, like, and you loan me $10, in a week or two I come back and I give you $15. So kind of think of like that percentage, that is multiplicatively what your return is. So these big hedge funds were basically betting that, oh, like GameStop is gonna tank, and then so a bunch of people on Reddit, they all got together. I'll include myself in that because like I did buy a little bit of GameStop. I wasn't smart enough to, get in way back in April, because I mean, even way back then it was just like, I'm not buying things at GameStop anymore. Why would I? I'm more of a weird investment where it's like I invest in things like I use. I'm not rich enough to invest in Apple or anything like that, but like I invest in companies where it's like I'm gonna buy their products and support them, or just be diversified enough to say like, hey, I'm okay if I lost this money. It's not a big deal. I can afford to take a hit. I mean, but after several months of poor performance, I might change my mind. Like, hey, like, yeah, like this really hasn't gone up a whole lot. This is actually just keep down. So now kind of the huge kerfuffle is like kind of that graph I showed a little bit ago. I'll show kind of like that shows that huge spike. That was just all the demand created from all the people on Wall Street Bets who were investing and buying GameStop stuff, and like it just because the price rose didn't deter somebody from buying. So like even though I'm like, I mean, for me and my budget, it's like I wouldn't buy. Some people are, have enough means to say like, hey, I can still buy GameStop stock at $193 a share like it is now. Which is there. I mean, I bought it when it was still less. I won't say how much, but it was definitely less than $100 per share when I started jumping in. because it was like, oh, well, at least I can see something tangible. And the so now that the prices rose, like partly why it's dipped so much is as a result of not just like Robinhood, which has been kind of like the default trading. Like, I mean, you don't have a Series 6 or Series 7 license. Like, I mean, you don't have to, like, you should be working for a hedge fund or a major investment group. However, it's like for a lot of people, and especially like companies like Robinhood, like they founded their whole business model was basically allowing everyday people the opportunity to trade and invest in stocks, like just like anybody, just like any other investor, or people on Wall Street or hedge funds, whatever. So kind of the same thing. So so Robinhood based their whole business model off that. However, like now they basically stopped and limited the trading due to the demand on all the stock that everyone was generating. And also if you had certain things set up where it's like, oh, if I like people sometimes also will say like the Robin has a feature in it where it's like if you buy stock at like say a certain price, but you're like, hey, I want stable, consistent growth of this. I don't want it to like go, be super insane. Like, I mean, if you look at the life cycle of GameStop stock, it never really went above $30 almost at any point in time, and it has gradually been going down over the last 5 years. And so I mean, it hitting what is that, $347 yesterday was a huge, which was huge. Oh, I mean, but if you look at something like Apple stock, like, I mean, and don't be scared when you see initial things that drop. It's like this is one day over the course of a day, and if you're a day trader, this matters a whole lot too. But for most people, like they'll throw money into a stock and just let it accrue over time. So, and with Apple, if you say like, oh, like, I mean, and so Apple, over the last year, this has been fairly consistent but over the last 5 years, it has very predictable and stable growth. But you can set things up in Robinhood and other like stock exchange things where it's like, oh, if there's too much of a variance, or if it falls below a certain threshold dollar amount, to sell the stock then. Like, and those are kind of like stock options or like derivatives. So I mean, that dip in 2019, crazy. But I mean, Apple stocks usually a very stable, predictable, and reliable stock to invest in. Same thing with Amazon. I mean, I've heard it said that for every dollar gained, there's a dollar lost. Stock market, which sounds interesting, I guess. I'm not sure about the validity of that, to be honest, because companies are constantly creating more shares for new investors or to allow for other members of their board as like a bonus. So like for a lot of board members of a lot of companies, regardless of whatever industry you're in, you'll still like they get a base salary like what you would make hourly, but a huge part of their yearly compensation is either in bonuses, but those bonuses are usually just, oh, those are your stock options. Like those are like that bonus is given to you in company stock. So it does force executives and company board members or chair people of a board and CEOs and executives or chief officers of whatever division to continue to have skin in the game. Like, because you wouldn't want your CEO of Academy to get money for operating the store or for running the company, but then all of his money's just there in liquid cash. Like you want him to have like some of his money almost tied up in the company, so it show like so he has a continued investment in the betterment of the company, the overall performance of the company to continue to do well. So when I set up my go live notification, I totally forgot that the strike was on the moon. That was a happy accident. A little bit about this Wall Street Bets subreddit. It is a very toxic subreddit at times. Like there are a lot of jokes about, oh, like I bought this, this Tesla. People will post a picture of their Tesla they just bought, and they're like, oh, this was a gift from my wife's boyfriend. And like, there's a lot of jokes about like my wife's boyfriend got me this. It was a gift from him. Kind of making fun of like the bro status where it's like they're so busy making money that they don't have time to be with their wife, and their wife has a boyfriend of their own type thing. And one of the things is like, oh, to the moon. Like one of the funniest like things I saw actually on the subreddit was that the SEC would start investigating like Robinhood or other securities like Citron, Capital, Citadel, or that those companies were like, the SEC has no regulation on the fucking moon. So, so it can be very toxic, but it also, I mean, there are some people to follow, and it's like, and people who've been doing it really well. And if you have the time and resources to do day trading, like go for it. Like you can make a lot of money in a short amount of time. You could also lose a lot, and there's a lot of, no one year to date has figured out how to consistently make money in the stock market to such a degree for it to be foolproof. Like if you know exactly what stock is going to rise and what stock is going to fall, like take what you know, go sell it to Warren Buffett, or go sell it to Wells Fargo, or Fidelity, or like one of the other big fund managers. Like they will pay you anything you want if you can accurately predict which stock and which company will rise or fall. But a lot of the stock market, a lot of like MSNBC and Fox Financial and things like that, like a lot of that is really just like analytics of people looking at the stock market and trying to make predictions about what's going to happen next. Which there's nothing wrong with doing that. And overall, like, does it still make sense to have money in the stock market? It's like, yeah. I mean, there are other ways to invest, and it doesn't have to be all in the stock market. So, and like a lot of people, especially with 401ks, like their investment portfolio is divided up not just among stocks, but also among bonds and certain other securities or commodities that aren't traded on the stock market, but would have stable, predictable growth. Like bonds are very safe and very predictable, and also they're backed by the government, so they're never really going to go out. Like, I mean, kind of like winning the lottery. If the government goes out of business and falls, like that'd be about the only reason like you wouldn't keep making money. So, but beyond that, like you'll be safe. Like the stock markets are a lot more volatile though. So, but that also is partly what allows people to make such significant gains over a short period of time. And I mean, by short period of time, that could be a day, or it could be a year or 5 years. So, I'll be honest, I kind of had been like made the decision this year to start doing things a little bit differently with money and just trying to have it work a little bit better for me. And not to go make, you know, not like I'm dumping all my life savings in game stock. Like I would not presume or advise anybody to do that. If that's what somebody wants to do with their money, like it is a free market, go for it. Kind of the fucked thing right now with all this though is that, um, I'm gonna show this real quick. Like Citadel is a hedge fund that owns Melvin Capital Management. Melvin is a is a GameStop short seller, predicted to lose billions due to the people taking back the free market. Citadel owns the Robinhood app. Citadel banned purchases of new GameStop shares on Robinhood, which is straight up market manipulation. So it's kind of like if I own the company that was trying to short GameStop, and then all of a sudden everyone who uses my product is now buying up that, that stock, like I'm starting to lose money hand over fist. The whole idea around the short, like about fucking the hedge funds over that were trying to short GameStop and AMC, BlackBerry, and Nokia. I mean, the main idea kind of with that is like, it's not as simple as, oh, like I'm betting that this stock is going to go down in price, and when it does, I'll make more money. I'll sell the shares back to somebody and make a lot more. They have to wait a certain amount of time. Like there are some rules that the SEC sets up, and that like you have to abide by certain trade agreements, so that like you're not straight up gouging and manipulating things so hard to be nefarious. I mean, we say that, however, politicians are still allowed to own stock, and many of them were briefed on the incoming financial crisis, back in January or February, and many of them like sold off a lot of the money they had in stocks and basically like transferred it back into bonds. So they basically a lot of politicians stayed insulated in that process, while most other Americans ended up losing almost all the money they had in March. So I mean it may be like a few wise investors who were a little bit more savvy with like global politics and kind of what was going on in different areas, may have gotten their money out of the stock market before March, when it just basically tanked so bad. I mean, and some of the rules with that kind of stuff is that, hey, like you have to like stopping the sell of certain commodities or shares or stocks is not necessarily a bad thing, because back in March it was very beneficial to stop the selling of shares, because every stock just went down, plummeted hard in March of 2020. However, like they basically suspended trading so that people couldn't keep selling and keep basically pulling their money off and having a fire sale. So, and as a result, like, things rebounded and grew back over time. I think from like my 401k, I saw like up to a 30% growth over the course of 2020, which was not bad by any means. And I started investing like right in February too. So, I didn't have so much money built up over time, that where when things happened in March, I was freaked the fuck out. But I couldn't imagine if you'd worked 20, 30, 40 years, then all of a sudden you see your 401k like just drop to nothing, or like any of your assets in anything like Coinbase or Gemini or Robinhood, Acorns, whatever, just like completely fail, and like basically go from thousands upon thousands of dollars to basically nothing a day, which is a scary thought. And if you start seeing that, like, you get scared. So that's kind of what's going on right now with GameStop, is that the SEC, or like maybe not the SEC, but like Robinhood suspending a lot of the trades on GameStop and AMC and BlackBerry. is partly what has led to that huge dip between stock being over $300 and being hardly nothing. So, or about 190 something. So, I mean, and there are some people in that subreddit who bought at like 300 and GameStop stock. They bought like $50,000 worth of GameStop stock at $350 a share. And it's like between yesterday and today, it's like they've lost money. I mean, they've lost thousands upon thousands of dollars. However, it's like just because they lost money, like doesn't mean that. I mean, if they had 50 grand to drop in GameStop, I would assume that that's not their whole nest egg, and they've got plenty of other money diversified in other stocks that are going to keep performing. One buddy of mine was saying how, hey, Ethereum is actually like, and Bitcoin are very stable and predictable cryptocurrencies, and a lot of these companies that are, so the idea, before I get into the cryptos and how it relates to the stock market, I'm going to stop and kind of go back and talk about the shorts again. So the short on GameStop stock, it's like companies can't just say like, oh, I'm going to bet that this goes down and then I'm going to, sell it and get my money back. It's that it doesn't quite work like that. You need to basically say, I'm betting that this stock is going to go down by a certain dollar amount or at a certain period of time, or is going to continue to go down over time. And after this point in time, like I'll be able to sell and trade back the shares I bought to the broker that I got them from. And that's basically how I make money. So kind of the same example. It's like if I bought, $10 of something and I'm trying to short something and I'm waiting for the stock price to go down. I wait for it to go down to $5. Like I, sell that stock back to the broker. I've made basically like, $15. So, and really it's like all I did was like take the stock from one person and then give it to and hang on to it for a while or sell it off and pay back the broker the money that they gave me for that stock. So the plan right now is with GameStop is to continue to try and drive the price up, because it's not necessarily so much about like driving the price up so much that these hedge funds lose money, which they are losing money, but like holding long enough that they will default on their short and that their short is not going to be covered or guaranteed anymore. And I mean, some of these hedge funds have already lost billions of dollars, and which is fine. But the idea is like, hey, don't get scared just because you see a dip. Like dips happen all the time. Miss the elevator, which is fine. So the idea is to just hang on, hold the stock until money or companies like Citron and Citadel basically like fault and fail. Because you like and that's like, so, and you can kind of say it's like, oh, like this is all gray because this is all still after hours trading going on. So after hours now is like it's still going over 300. So it's like when the market opens, like say at this exact moment in time, GameStop would jump initially from when the commodities on the floor, which would go from $197 to $346. So, I mean, with that short stuff in mind, like the idea is really to just kind of stick it to some of these companies that own stuff. And it's so sticky now with like, oh, like one of the main companies that is responsible for allowing investor, like, just like your average Joe, your everyday person, to invest in the stock market, then all of a sudden limit what you can buy, or say, oh, you can't buy this anymore, or oh, if you had selected to have a change in variance of your price percentage where it was too much or too low, or to sell off like non-essential stocks, like basically something that's not part of NASDAQ, that you would end up, like, you gave them the permission to sell that kind of stuff. So some people are like really pissed that like that was a setting app and they didn't realize it. So I inherently don't have those settings turned on, mostly just because I like to be weirdly micromanagey of that kind of stuff and control it. And do have to bear in mind that, okay, like, yeah, things are gonna fluctuate, things are gonna go up, they are gonna go down. Like, when is a point where it goes down too much? When is the point where it goes down not enough? So I mean, but GameStop was kind of this weird bellwether that really has freaked out a lot of the people at Citadel and other companies, like, because it wasn't like GameStop was the only one. AMC was also being talked about, like BlackBerry was also being talked about, Nokia, something else now. So I'm going to pivot a little bit and talk about cryptos and how it kind of relates to the stock market. So kind of a trend I've been seeing lately is that when the stock market is doing poorly, cryptos will typically rise, partly because they're the amount of how the best way to describe it. So the security, the regulations around securities and stocks are different than how they are for cryptocurrencies, because cryptocurrencies are a deregulated source of currency. They have their merits and their drawbacks, where they can be a lot more volatile, but they can also be a lot more profitable. And same thing, it's like cryptocurrencies, you can look at cryptos the same way you look at the stock market, where it's like things are going to rise, things are going to fall. Look at Bitcoin. And then like Bitcoin kind of just being, the all-time thing. So I mean, you can kind of say like, oh, like way back in 2016 when it kind of got created, like 4 or 5, which is a lot of money back then. But it's like, oh, compared to what it was, a couple of weeks ago, $40,000. So I mean, if you had bought it in 2016, that's a huge, I mean, thousands upon thousands of percent of a return on your investment. So, I mean, you can kind of see here that's like that, just because I say like, oh, crypto, is sometimes safer. It's like you can kind of see back here in March where it was like, it dropped to $5,000 per coin, which I mean was probably the lowest. I mean, I remember I worked with somebody when it hit, like 14. I was working with somebody who had a couple of Bitcoin at like 20 grand, and I think they were planning on selling it to buy a car or something. So, but Bitcoin's a limited commodity, and it's only going to get harder, but it is going to be a limited and capped commodity in like the next 5-10 years, which will increase its value over another 5-10 years. So even if you only own you own half a Bitcoin, I mean, that's still $16,000 to own half of a coin, which is pretty crazy. And stocks are kind of the same way. It's like you can buy fractions of stocks. So it's like, I mean, I think Amazon stock is 2 something, I think. Oh, I am way wrong. 3,323. So, which you can kind of see, it's like, Amazon, another really safe bet. over time. So you can say like, oh, like way back in 2003, 97, it was $4 or $5. Like, so over time, and this is kind of the idea. It's like with your 401k and investments, like you ideally want to like drop it into something and then kind of forget about it. Like, I mean, that way when you kind of check on it like years and years later, like you're like, oh, like I bought Amazon stock in 2010 on a GAF, like, and I bought like 5 shares, like, so 5 shares at $51. Like, I spent $250 on that. Like, oh well, shit. Like, 5 shares of Amazon stock now is, you know, 15, $16,000. So, I mean, and ideally, like, it's only going to keep going up. So it's like, yeah, like you could sell your Amazon stock for $15,000, and there would be people out there who are more than happy to pay, $3,300 per share to acquire it now, because they're basically betting that in the next year or two, it's going to go up to 4,000 or 5,000, and then they basically build on their ROI. So with crypto being synonymous with the stock market, like kind of what I've seen where it's like where if stocks start doing very poorly, things will basically toggle and kind of go into crypto. So like I'll look it up real quick. I'll be completely transparent. Today is January 28th, 2021. Cumulatively, I have, well, at the time the market closed, by this afternoon, I was actually like losing. I was down 10, 13%, up to 20% on my investments in the stock market. And kind of about the time the market closed, I was basically at break even. So, I mean, which even if you break even on a singular day, not too bad. Due to the after hours trading, though, I'm actually up 27%, which is good news. So I think everyone's starting to get freaked out a little bit about the about Robinhood being investigated, and even the Southern District of New York is opening an investigation or filed suit against Robinhood. So, which sucks because honestly, that's what I use. And so, even though they've kind of fucked over a lot of people, it's kind of like, oh well, like what about the people who have been using Robinhood to actually like do this? And basically, which is really fucked when you kind of the example I gave earlier with that tweet was, oh, you own the company that people are using to sabotage something you decided to do backhandedly and kind of nefarious. Then like, oh, you would basically stop and halt people from using that app or service. And people got so pissed that Robinhood was even doing that. Like they started rating Robinhood really poorly on app stores. So Robinhood went from like a 4+ rating on the iTunes App Store or the Google Play app down to like 1.1 stars, and like just because people were flooding the reviews. And but I mean, yeah, I mean, since the market closed, see if I can look up the time, when I was basically at 1% gain on my money in the stock market, I had gained about 6% in my portfolio of crypto. So, and I mean, and that's like across all your investments. So it's not to say like, oh, like if you do this, this is what you're like. I mean, you kind of got to think about it. Like, I mean, almost all my stock stuff has, like all my stocks on the New York Stock Exchange have gone down, and I have lost money on those today. But then it's like, okay, kind of pivoting, selling stuff from one thing or investing money in another place. Like you can either make up those gains, and ideally, like you want to have a bunch of money. Like even if you have like $100, like I wouldn't suggest putting all $100 right into GameStop. Like that is not the best strategy. It's like you would want to like when people talk about diversifying their portfolio, they're basically saying like invest in a bunch of different things. That way, like if something like GameStop continues to go down, you haven't lost $100 like basically on some big gamble. Like take your $100 and select 10 things you like or that you purchase regularly and put that $10 towards each one of those things, whether it's GoPro or Xbox or Sony um, or Entertainment Arts or Disney, Amazon, GE, Starbucks, like whatever it is. Like I would say, like whatever it is you're buying or supporting, or that you buy consistently, or that you know will be a fairly safe bet. It's like, yeah, it's like, can you buy $10 of Amazon stock? It's like, well, no, because it's like $10 of Amazon stock is like less than 0.001%. So um, they won't really, they don't really want to do that. Um, like, but if you start making money over time and you've made, you know, $200, $300, $400, like, oh, you could redistribute all that money you made through all your diversified stocks that you've gained and take $300 and buy like 0.1% of a share, or like 0.1 shares of Amazon stock, you know, with other people who are also wanting to buy 0.01 shares, and then you'll all share that 1% of Amazon stock. And just because it's not that entire one stock isn't going to be something you hold in your hand, just like a lot of things in the information age of technology. Like it's not a lot of things that are tangible, they're pretty ethereal. But so yeah, I'll be honest, like a lot of my 27% gain stuff was either from diversities, but a lot of the things like GameStop, BlackBerry, AMC, it's like, you know, they spiked a little bit earlier and then they've all kind of like they dropped a bit and now they kind of just plateaued, which is fine. But a lot of things were kind of screwed with the stock market, mostly because like of the GameStop thing. So I mean, then this was really kind of what it all kind of boiled down to. It's like basically saying like, hey, Wall Street, hedge fund managers, these huge investment corps, like they shouldn't be the only ones getting rich, especially in the time of a pandemic where we have thousands of people, thousands of Americans dying every day, like just out of the cost of doing business, where every average person basically has either gotten like $600 or $1,200, like cumulatively $1,800 over the course of 11 months, almost a year since lockdown's been in effect. Now, I'm fortunate I still have a job and my work hasn't been too interrupted, but and streaming is not my job. I'll make that very clear. However, for the government to basically say like, oh, $1,800 is enough for most people to get by on, like that's just not the reality. When so many businesses have had to shut, like a lot of the wait service and service industry has basically taken a huge toll. I mean that's partly why you're seeing so many like people kind of go to OnlyFans or sex work, is basically because like they can't wait tables or do any of the service industry stuff that they normally do. Like nightlife's basically taking a hit. Like liquor sales are actually doing really well right now. People are just bored at home drinking. And a few other industries like pharma and technology, Amazon, obviously, Apple are gonna, well, no matter what. I mean, this whole thing with GameStop is basically about saying like hedge funds who are betting against companies to fail, especially in a time of a pandemic, is pretty fucked. And then they're gonna try and make more money. out of this whole situation, which does not help all those employees of GameStop. It doesn't help anything for that company's market value. It's like the only thing we actually can do is actually create more of a demand by buying stock in that company, supporting it, and basically just saying like, fuck you, you're not going to short this and win. Like, 'cause that's what a lot of things that deal with Wall Street are about. It's like you're basically betting on different things. So I mean, don't treat, if you are going to invest money in the stock market or use Robinhood or Acorns or Gemini or Coinbase or anything like that to invest in crypto or securities, stock, don't put all your eggs in one basket. It's just like gambling. It is just like playing poker. It's like you wouldn't put everything based, like you wouldn't bet your whole stack of chips on one hand. Like you would have some hand theory with it. It's kind of the same thing with the stock market. You want to have, like, be able to kind of keep playing with the money you have, or like you want to have you want to hedge your bets on a bunch of different things. Like I wouldn't want to, like some people are doing, like basically if you took $300 to the casino or blackjack table, you put it all down on one hand. That's what it would be like if you spent all your money or your next paycheck all on GameStop stock right now. Don't do that. Think of this more like roulette, where you can bet on multiple different things all at the same time. You can bet on red, black, evens, odds, 1 through 12, 13 through 24, 24 through 36. Evens, odds, every red, black, and then also kind of split your chips among different squares. So I mean that's kind of more what you would want to think about with investing. I guess like one other note I wanted to talk about and share a little bit was you'll hear, and this is more for like younger people who may not be familiar with what's going on, and I hope I've brought some enlightenment to the situation and circumstance of what's happening. But the whole thing with this circumstance is basically just to say kind of like a fuck you to hedge funds who are trying to profit and make even more money off failing companies. But things are already hard enough as it is, when times are already unprecedented and really like not okay. So I mean, and really just kind of about taking a stand and saying like, hey, like, you know, I want to get rich. And it, like, in as much griping as I've done about Wall Street bets, like it also has been really rewarding to see that, oh, like there are some people who've paid off, you know, their entire student loan debt just over the course of a year by following some people's advice and lead in the Wall Street bets community. Don't get me wrong, it can still be toxic, it can still be really fucked, but like there are some people where it's like, oh, this is really inspiring, like, you know, and shout out to the boys who do the diligence. And but one other thing I wanted to kind of notice, like, and it'll be interesting to see kind of what shapes up over the next couple of days. Like I'll plug a few other people's videos who I thought were really informative, like Philip DeFranco's coverage on this on his YouTube channel has been really, he covers it at great detail. It's been really fun to watch. And he even had sponsorships with Robinhood, but then his video today basically just straight up called him out and was like, no, never again. I don't care how much you're offering. Like, this is completely fucked. I can't believe you would suspend people's trading and their ability to buy. So I mean, a large part of this GameStop thing was like, a lot of it was about kind of thinking about it as like almost like collective bargaining, where it's like, oh, like you don't get too far if it's just you being one person, like unless you're like Jeff Bezos or Elon Musk or Warren Buffett. But if you have, you know, thousands upon thousands of people who all agree to the same thing, like your bargaining power gets raised tremendously. So So that was kind of like the whole thing around like the Wall Street Bets, um, GameStop thing, and it's really just kind of it's so screwed, just mainly because of like the Citron and Citadel thing, um, but which is terrible. And it'll be interesting to kind of see what shape, like what gets shaken up over the next couple of days around this. Um, and also, like, I mean, kind of the idea is like that to say like that there's no benefit in buying GameStop stock right now. It's like that's really for you to decide. I personally don't think so. It's like if you have the money, the disposable income to spare, and you're not going to, and you have all your base needs covered, like you've already paid your rent for next month. Bear in mind, February is a very short month too. Um, you already have, you know, a fridge full of groceries, paid your rent, like all your bills are going to be paid for. Um, you have play money to kind of like throw around, and you don't care, and it doesn't matter to you if you're never going to see it again. It's like if that amount is enough for you to justify buying GameStop stock, like yes, you would continue to support the demand. I mean, and now like I guess um, Melvin Capital or Citadel. Citadel's between a rock and a hard place right now because they're kind of damned if they do and damned if they don't. Like they're losing billions on the short selling of GameStop stock. So I'll kind of go back to this. Like they're losing billions of dollars, and I keep hearing different numbers. It's between 2 and 70 billion. So who even knows? However, Robinhood stock or like Robinhood's credibility is going to keep going down, and they could potentially lose even more money if Robinhood gets shut down or if people leave their site or start pulling all their money from Robinhood and basically redistributing it to some other trade company like E-Trade or something like that. E-Trade does have a lot of restrictions um, on their trading abilities, so that's part of it. But which, and I think E-Trade, they do allow for aftermarket trading also, but you can't. Robinhood's been one of my more favorite ones to use because you can basically just make trades almost instantaneously. And it's not like you're actually there. It's, you know, everything's actually delayed for the commodities you're selling, but things are happening a lot quicker because things are more. So I mean, Citadel is kind of in a rock and a hard place because they could potentially lose billion. It's like, are they going to lose billions? They're going to lose billions either way, right? Which to a hedge fund or investment company like that, like losing billions is part of the game sometimes. Like it's going to happen, and that is part of what dictates the free market. However, it's like, are you going to end up losing more from defaulting on your short gamble, or would you lose potentially even more billions by everyone who uses Robinhood basically pulling their money out and then taking it somewhere else, which would also still be redistributed into the stock market on some level, but the market itself would collapse for a couple of days, or it would be really rocky and it would dip a lot. The idea would, and not so much to where like, I mean, all the investors in Robinhood, it would make a dent in the Nasdaq or the S&P 500. However, like it would make a dent in that, but it wouldn't be so catastrophic. Like it could potentially do another fire sale. So it's like it's been kind of theorized by a lot of economists that, like, you know, the market's basically on the edge of a bubble and it could pop any day now. And there's more arguments to support that than there are to say like, oh, it's not going to happen. Like, you know, it's going to be whatever. Like, I mean, nobody thought it could happen in 2008. And it was one of the worst economic crisis of it was one of the worst economic crises of my lifetime to that point, and I was hoping I would never have to see it again. But it's like if it happens again, I think it might be a lot worse. Like, and it'll make the thing that happened back in March. I mean, even look at Amazon stock in March, like really even didn't have that take that big of a hit, and also everything's recovered a lot better. Uh, Man, I left work at. Oh, it's not Cabela's stock. That's fine. Man, I left Cabela. I worked at Cabela's and I had stock in their company back in 2013 and 2015. So kind of like right, kind of around here. And even Cabela's stock was like 50, 60 bucks a share by the time like, and there were even rumors that Bass Pro was going to buy them way back then. But so glad I kind of ended up selling off all that, which wasn't a whole lot, but August of last year, their highest peak was 75, but like yeah, even in March, I guess that's around March. Yeah, and they fell off pretty sharply. I mean, $65 a share to 30, like half. Oof, rough. I mean, but now it's like, hey, like they've, since March, it's like, that's almost a 50% return on investment if you invested in, had nothing in Bass Pro. I mean, would Bass Pro go up over time? It's like, yeah, probably. It's going to be rocky, but it's going to be better off one of those things you throw money in there and then just kind of forget about. So, and then check on 5-10 years later. So in case my boss does end up watching this, which I'll say, hey, thank you and appreciate you, and she's the best boss ever. But almost anytime we talk about stock stuff, she's like, oh, I don't really understand how stock things work. I'll kind of cover this. So a lot of times in the news, especially for you younger guys, girls, S&P, like, why do you hear the S&P? Karma, you can invest in Dokeland Industries anytime. So, one of my goals actually for this year to do things differently with money, to actually set up a DBA. So, I'll let you know when I get it done, and maybe we can do business. Yeah, yeah. Or Karma, you can always watch this whole video thing later too. Or if you have a particular question about something, I'm happy to relay what I know about it. And if I don't know anything about it, I'll just straight up tell you I don't know. But I'm happy to share what I've picked up on over the years. If you do have questions, what I was going to say was the S&P 500 and the Nasdaq are usually always mentioned in earnings reports or in like little news blips, because the S&P 500 is an overall indicator or barometer on how the market did overall. So when you hear things like reporters say like, oh, the S&P gained 200 points today, I mean, in the overall span of the S&P, it's like that's not a whole lot. But like if you have a lot of money diversified in other stocks like Amazon and Apple and say something like Bass Pro Shop and Nike, like you could kind of use that to say like, oh, like 200, like that was a small gain for the S&P, so my stocks in Nike and whatever else probably had a small gain also. That's a little bit different than the Nasdaq. The Nasdaq is actually made up of a bunch of indexes. And basically, it has to do more with, right here, known as NASDAQ, is an American stock exchange, Liberty One Plaza, blah, blah, blah. It's basically, it takes a lot of the kind of more forward-thinking companies or bigger IT companies, kind of like Facebook, Amazon, Apple. Trying to think of other ones that Bitcoin, whatever. Not Bitcoin because it's a deregulated currency, but things like Facebook, Amazon, Apple, Tesla, SpaceX. Like it's basically grouping all those companies together and kind of diluting them and melding them all together. So when you hear something increases on NASDAQ, it's talking more about like newer companies, not kind of like your older commodities or brick and mortar stores necessarily. It's kind of more like IT companies or logistics and service providers, or things that'll trade in like more of an IT space. I think Oracle's in it too, but there's actually an infographic probably of all the companies. Yes, Karma. If you spent $200, you could triple it. You could even quadruple it, or even more. A lot of it's gonna, like, you might hear the term ROI, or percentage increase, and that's basically like, so if you gave me your $200 and I said I can get you a 50% return on your investment, like in a week, that means, hey, of the $200 you gave me, I would come back to you next week and I would have $300 for you. So, like, that way, you weren't really out the $200, but you did make that $200 into $300 by getting a 50% return on your investment. And so when you see percentages, of stocks, like, they're usually listed from that day. So if you, yeah, I mean, that would be a good week, right? And that'd be a good week for a lot of people. I mean, but like, to put all your $200 just to me would be very speculative and may not be the wisest investment. So I think kind of the best idea would be to diversify your portfolio by taking your $200 and kind of splitting it up into, buying not necessarily a whole share, but even partial shares of a stock for different companies. So, like, we've heard of all the GameStop stuff. So, I mean, over the last one day, there's been a 44% loss of the investment of GameStop. So people who had money in GameStop stock yesterday, the market opened up this morning, it was at $263.49. Lost money by 4 p.m. and they lost 263 minus 197. So they lost about $60, $70 if they owned a share. So, which is a 44% loss in that one day. We still can't answer that. Like, still can't revive in D2. Or I guess, like, the stock bouncing back up would be like if you self-resed, versus like this gradual incline is like us waiting around for one another in a strike for you or Gonzo to come over to my ghost and grab my res there. Like, because you're basically just waiting over time, and it's like, we'll still get through the encounter, or we'll still complete the strike or the raid, but we just kind of gotta wait before we can get back in the game. I know. Karma, I'll be honest, like, my strategy is, like, I buy stock for things I invest in or I use myself. So, yeah. Well, if you could actually buy several coins of Dogecoin right now, which is kind of on the rise, um, which may fall pretty steep by tomorrow or tomorrow evening, but like right now is, I mean, it's spiking pretty hard. I mean, all cryptos are doing pretty okay right now. I mean, I mean, and I would also say like Ethereum's also a really safe bet over time. I mean, I started buying Ethereum 3-4 years ago, and I've sold some, and I've sold a lot since, and I haven't been the most savvy with it, but I mean, I started buying Ethereum back in 2018. If your dad has one Bitcoin, he basically has like 40 grand. So if he can still access it, so, and if he still has one Bitcoin, if he can still access it, I would say like just hang on to it because it's only going to become a more scarce commodity over time. I mean, the sad thing with Bitcoin, and I've heard like some stories. I don't know if you have like that people have Bitcoin and they end up like throwing it away because they lost their hard drive it was on, or it's linked to a passcode on. Um, it's an encrypted currency, so to access it and the coin, it's basically like a almost like a barcode. But to access that, you have to type in a password that you had generated when you bought it. And some people have completely forgotten their passwords. Like, I heard one story of this guy who has like several $1 million worth of Bitcoin that he bought back in like 2016 and cannot remember the password to access it. And he, like the encryptor that he used only allows you to try and guess your password 10 times, and he had made 8 attempts to unlock it and has 8 failures, so he only has like 2 attempts left. And you can, I don't know if you can crack it. A buddy of mine from high school did know how to crack some Litecoin passwords in Ethereum, but even then he would, I mean, if somebody came to him and was like, "Hey, I need you to crack this password for me," he could do it, but like his kind of rate was like, "Oh, like yeah, but I need like," depending on the amount and how much was in there, he'd either say like, "Oh, I need like 10, 15, 20% of your coin," basically like run this algorithm and crack your password for you. Oh, that's awesome, man. Have you had to spend a crazy amount of time in edits or in editing a lot of people's videos? Oh, that's pretty good, man. Really not too bad. Shoot me the link on Discord. I want to see if I've seen it there in Palm Springs, um, or if Brett knows of it. Yeah, I mean, I was talking with the girlfriend, and she was saying like how she had a buddy in college, and anytime he had some free time or in between classes, he would basically just jump on like E-Trade or something and start just doing like little day trading when he had spare money to burn, like, or just do like little trades here and there, kind of watch what was moving and what was kind of not moving, or stalling out, or and kind of decide whether it was better to hold and just see if it rebounded, or like if something was on a gradual decline and be better off just kind of selling. So one of my favorite examples is GoPro. So I mean, when they first launched, though, I mean, they back in 2014, that was like a really young billionaire too. I mean, but like since it launched, it was like, oh, you know, $80-$90 a share, you know, but it's gradually been going down. So it's like, you know, if you bought any time in the last year, you know, it was all pretty cheap, $4 or $5, $6 a share, you know, but hey, now it's like $9-$10. And it's like, hey, buy super cheap, like it could rebound and go up. One at a GameStop where, what was it, back in April? Yeah, like almost all of last year is like $4 or $5 a share, you know, and then, you know, in the past couple of, you know, and then it just kind of starts like slowly rising, and then all of a sudden, boom, like $347. Which, I mean, if you bought $200 worth of GameStop stock and back in August or September for $4 a share with your bucks. uh eh, I'm not. I did already spend the money on Cyberpunk, sadly, which I still play here and there, but it's it, like anytime I start to play it, after like an hour or two, I hit some big bug, and it just like takes all the wind out of my sails. So yeah, if you had bought GameStop stock back in like April, or even like a year ago, it was like about $4 a share. Even with the hit it took today, it's like that's a 7,000% return. So potentially karma. And your $200 would have been 1.1 million for like almost like $1,500,000. But I mean, that's a really rare outlier. Nobody could have really. I mean, some of the Wall Street Bets crew were like eyeing GameStop a year ago or back in 2019, but I mean, it wasn't really even coming to much of a move like this up until 2-3 weeks ago, like right around the end of 2020. I think last night, like, yeah, it's like I started kind of hearing about it like the short maybe around like September, but like there had been more buzz about it around the end of 2020, the beginning of 2021. But I mean, really, you're better off like just taking your money and throwing a little bit behind a bunch of different stocks like that you think are good. So yeah, nice. If it happens to anybody, it should definitely happen to you. Um, I mean, I kind of made the decision. Yeah, talking with Brett and her saying how she had a friend of hers in college who just do day trading kind of on the side. And I've talked with like a couple of coworkers where I think I'm going to start doing that a little bit just when I have time to kill. Like, oh, just take a break from 5-10 minute break from work, you know, check stocks, like just kind of see what's moving, what's not, move things around. I mean, Tuesday, Brett had a colonoscopy and I had to take the day off work. So while I was waiting for her to get her colonoscopy and endoscopy done, I mean, I basically just moved stuff out of like McKeeson and Rowan and GoPro and what else did I? Something else. I think it was like Ethereum Classic. I basically like sold my positions there and then bought into GameStop, and it was at like $60 or $70 a share then. So I mean, I bought it around like $70, so it's still being at like 193. It's like I've still made money off that. You know, not as much as it was when it was 390 something per share, but and even then it was like that was like a fraction of a share. Like hmm. So selling the food and then so the editing you're doing for the vids buys the money or like use to source more money for the ingredients to then sell your food. So you're like basically taking money from one thing and then reinvesting it into something like another. Okay, cool. Yeah. Um, you know that that kind of reminds me of what George Lucas said about making movies. He was like, I don't make Star Wars movies like just for the money. He's like, I do it to make money so I can make other movies that I invest in, either I'm a partner in or a silent partner, or that I'm just passionate about. So I can just keep doing that. So like reinvesting in your business or brand or in another business venture, like always a good idea. I knew one guy who kind of always had that mentality too, and ended up becoming, he is the largest distributor of marijuana in like Californians. I mean, he was on the run for several years from the federal government because of a lot of the laws and stuff, but I mean, that guy's like a fucking millionaire several times over. I mean, but he would just basically do the same thing. Yeah. Yeah, I actually know him through his brother. I mean, and they're both crazy as fuck, but the weed distributor guy's really smart and always just had like a good business acumen. Of like, I think one of my favorite stories about him was like him and his brother were, they delivered newspapers in like Detroit or Chicago, and like they worked for this one paper company, and then his brother was like, hey, like we're already going on these routes, like why don't we actually ask the other newspaper companies if they want us to deliver their papers? Like we're already running these routes, like we might as well just like, you know, get other paper companies to pay us to distribute their papers. And it's like, yeah, it'll make our deliveries a little bit longer, but like we'll make 3-4 times as much. And I mean, so he just like had an interesting way of thinking and looking at things and like how to just make more money. So And just like kind of did that, and then kind of fell into the weed thing back in the 90s, 2000s. And yeah. I don't like the look of it. But yeah, Cameron, you gotta play Ashes with me when it gets into beta. I think I'm gonna. Yeah, I liked his arms. I didn't like anything else he had going on though. So, like the Synthesep with green looked pretty good, but everything else was like, eh. Don't judge me for my Titan. It's kind of a hodgepodge of a look right now. Yeah, Cameron, I'm like super hyped for Ashes of Creation. I think I'm gonna like throw some money at the developers for that and see if I can't get into their next alpha test, but gotta kind of put down some cash to support them. So, but in the meantime, in addition to Destiny, I think I'm gonna start doing more MMOs like Old Republic and EverQuest used to be my jam, but I don't know. I've been pretty unmotivated. Give it a try. And also it'll be interesting to see if New World kind of competes at all, so. Do get super toxic. All the bad things. Yeah, how's school going for you, man? Yeah, I was so difficult. Good, man. Yeah, just keep with it. I had yeah, like trying to grind out my degree just sucked. Being close to 30, a little over, and still finishing a undergrad was a huge pain. But it was such a big goal in my life for so long that I was just so committed to it, and I just spent so much time and money pursuing finishing it that I just had to see it through, and I'm so glad I did. Like, it's definitely opened a lot of doors and it made life a little bit easier. I've been kind of thinking about, like, oh, well, what now? Like, I always had something that I was working or striving on to do as like kind of a big goal to set up to strive towards. And I was kind of thinking about that this last year because it's just been nice to just work and not have to stress about money or getting things together and scrambling and trying to hustle all the time. And I was kind of thinking about it. I was like, might be a little late to the party, but it's like I want to make $100,000 a year. So that's going to be the next goal. That's going to be the next big goal, is to just make $100,000 a year, whether it's through current profession or something else or a different business or what, or streaming. There you go. Y'all go on vacation? Are you gonna stay in Argentina or gonna travel around somewhere else? Oh yeah. Is it mostly just because he's doing like Final Fantasy now? Nice, man. That sounds like all the premier destinations, like Japan, Argentina, back to Baja. Shit, like a lot of my coworkers would just give anything to go to one of those places. Yeah, I know. I've been really bad and not consistent at all, which I think has been the biggest problem. And every time I start to think about a schedule, I'm like, that day kind of rolls around. I'm like, oh, this is what I would be doing. And then I'm like, kind of glad I'm not doing that. Or something comes up with a girlfriend and like we have to take the dog to the vet, or take a late night emergency trip to the hospital, or go run whatever errands that didn't get completed during the day. So it's been admittedly a little tougher than normal lately, just because she's basically been on bed rest, and I have to get everything for her. So, and do everything, not just like do everything for her, but then also do all the stuff around the house too. But I don't know. I did talk with her about like us doing a co-stream together, so, or her being around. Oh, oh. Ah, dang it. I was gonna. Nice. That's awesome, man. Oh, come on. Fuck. Yeah, I probably could have had him if it wasn't so ADS. Fucking dick. Yeah, that'd be fun. I mean, we'd love to travel and get around a little bit more. And that would be the goal, man. Yeah, I mean, and you got so many like great destinations to kind of be around or like have access to. Like so many options. The loadout. Yeah, man. It's definitely doable. I do have Battlefront 2, but only on the PlayStation. I haven't gotten it um, on the PC just yet. I'm also like a little pissed because it's like I don't think it'll sync on my stuff. So I jumped right into that one. Oh wow, jumped over here. Yeah, I didn't think so. Yeah, so it's like all the progress I had made on PlayStation, it would basically um, I'd have to start completely over PC. Oh, dang. Oof. Yep. Well, that was a really rough. Yeah, I mean, I feel dumb also because like when I was in when I was kind of grinding out the last like year or two of my degree, like a buddy of mine worked for EA here in Austin, and it was like, oh yeah, like you want to code for Battlefront, like you want to beta it, and I was like, yeah, like I don't have time, I'm too way too busy with school, um, and kind of passed in a lot of it, so I never even got in on launch. I just kind of picked it up in the last year. Oh no. Oh god, dude, that sucks. I mean, dude, better off booking it now, and then like even like April's really just right around the corner. Short couple of months, 2.5 months, and get it done. I mean, I have to chide my girlfriend about that kind of stuff all the time. I was like, doesn't matter, just set it up, have something on the books. Like, if something opens up sooner, cool. If not, like, you're fine. But I'm so glad to hear that KOTOR might be back in development. Such good news since EA and BioWare kind of got their stuff taken away from it. Yeah, possibly, but I doubt it. I mean, I loved Battlefront on the Xbox and like the third person, and that's been like one of the big things I've been really kind of bummed about was like the third person and the camera control movements and stuff. Like I do like the different classes they've introduced, but like the scorecard you got on on the old Xbox was also really good too. And now you could rank that up. Like they kind of kept that, but I I don't like not just the pay to win, but even then it's like, oh, you couldn't just rank things up in solo play. You have to rank everything up by actually playing. Hey Reed, how's it going, buddy? I'm sorry. Sorry, you filthy animal. Give me back my son. I don't know. Why can't you take clips? Hmm. Nice. There you go. I'm glad you got it figured out. Hmm. That's kind of weird. Oh, you can't quite see it. I hover over the perk, it shows my ammo dropping quite a bit more. It shows like the down arrow instead of the up arrow whenever I select backup mag. But it still goes up to 19. It's fine. This is always Brett's favorite part, is like helping me with the colors of armor stuff. Have if not, I mean, she's definitely been laying in bed. But yeah, it is getting about. Yeah, buried animal. You missed my whole long diatribe of me ranting for over an hour about stocks and GameStop and Robinhood and all the things. Yeah, it's okay. Just trying to impart little bits of things because I've been in the Wall Street Bets subreddit for a while and it was so dumb, and now it's gotten like so much attention, it's ridiculous. Oh god, that is a really long, really long list. Let's take a quick peek. I'll preview it. There you go. All all the subreddits I belong to. I mean, you would think I would have like more karma, but more karma in my life, and then also karma on Reddit too. It's Redox_101 is by u/. I don't know. I don't really see the point of using Reddit for porn. Like, it's just kind of like, eh. Like, I mean, I've learned. I know that they exist, like on a few like um, subreddits and stuff. Like I know of them, but it's like like I'm mostly into it for like the forum discussion and like to read interesting things. Like I don't want to be distracted by all that other gosh. Well, if I ever find Gonzo's OnlyFans site, like I'll probably go and look for his. But oh yeah, man, dude, don't kink shame me. That's my thing. Like, what I ask Brett all the time. I'm like, can you just look like you're playing a game and you're really uninterested in it? Like, I mean, do they do video games or is it like tabletop games like Civ, or like Settlers of Catan? Because that would be great. Hmm. They're DVA and missing their units. Hmm. Ariana's. You don't. Oh, okay, okay, okay. Using your ult. Okay. Now I got it. Yeah, I never really played Overwatch 2. Like, Buddy Miguel was always like, kind of like the guy I was gonna look for to like shepherd and carry me through everything. I mean, I'd watch his stream occasionally, and it just looked like there was so many different things going on. I am having fun. Hmm. Hmm. Yeah, I didn't know it was free. Like, I thought it was always like a pay to play type thing. Like some kind of subscription thing at least. Hmm. Just about, yeah, okay. So one-time purchase and then you're done. Okay, that's not too bad. Ow, boo. Yeah. Tom thinks. Did either of y'all watch AOC's thing? Hmm. Hmm. Well, that's pretty interesting. Yeah, I have to check them out. Yeah, that Warlock had no chance. I was actually surprised. I think I got 2 Army at once. It'll be nice when Gilda titles start. Crack. Crack content. Not even the hunts. It's like it's all these weapon. Pick one quest. So, it's fine. Whatever. No. Buried. Karma was with us, and we actually outpaced a lot of other teams up until the second real encounter, and then some of our mechanics were just a little. There's a little confusion on how they worked, and we and a lot of the feedback has been like that the encounter we got stuck on was a bit overtuned, as in it was intentionally designed to be a little bit too hard, even for a challenge mode. And I mean, a lot of teams got stuck on that hurdle, but I mean, for the teams who did get past it, almost like if you got past that encounter, you would have gotten the day one seal. But I mean, that's kind of where our team got stuck. But once the challenge mode got lifted, I mean, we cleared it within a couple hours. So yeah, yeah. Well, I mean, the rooms themselves weren't that insane. It was just like the juggling is what we didn't quite have down. Like because we were also under the assumption like you couldn't pick up the ball if it got shut off. Like you had to have somebody else pick it up, which made things a whole lot more complicated. Um, but yeah, like and also there was like there's a delay with picking it up too. So yeah, I mean almost all the raids are timed. Actually, since there was a bug a couple of weeks ago where strikes were loading, like strikes are usually a 3-player activity, but there was some glitch where I think it was like 6 to 12 players could all load into a strike. So I'm hoping they're going to consider making a raid that's a like basically 2 strike teams, because that would be really fun, and do like a bigger, larger scale raid, kind of on the same in the same vein as either like Operations in SWTOR or Final Fantasy, or I'm not sure how big the raids are in Eve, but I know in EverQuest and WoW, like we were getting up to like 40 plus people to raid. So I mean, when I first started playing Destiny and doing in-game content there, I was actually kind of shocked that raids were only 6 people. I was like, how do you have a raid with only 6 people? Like, that sounds like 12 people too little. So, but it's been fun. It's like, it does, like all raids, it does lean on teamwork and a lot of collaborative stuff. So I guess, but that's gonna do it for me. It's gonna get late here, getting close to bedtime. So I love both you guys, Karma, and you filthy animal. So. No, you have to subscribe to the like and follow the subscription. Like my subscription. Or follow the hit. One or the other. Don't care. Anyway, love both of you guys. Hopefully I'll see y'all. I'm gonna try and commit. Karma, thank you for the advice. I'm gonna try and commit to something, even if it is OnlyFans. But at least try and commit to 2 weekdays and 1 day on a weekend. So, so. I will. Thanks.